Hi everyone, welcome to this week's weekly market recap. I'm sorry we couldn't do it last week. I was actually heading to Vegas for the money show. We had two presentations in there and they were packed and very, very successful. But without further ado, let's get to this week, digest what happened, how did the market behave. We had a lot of amazing earnings that came out, and we also had the GDP numbers. So we're going to dissect the GDP numbers. We're going to take a look at some of the earnings and see what's about to come over the next few weeks in the market. So, today was a really positive day. S&P up 2%, NASDAQ up about 3%, erasing all the earlier losses. So on a weekly basis, when you look at the sectors, you will see the communication services doing very well. And part of it is because of the earnings from, Facebook, previously known as Facebook, now Meta, as well as Netflix. Consumer staple also did really good, thanks to Protocol and Gamble, as well as Pepsi and Coca-Cola. These companies all had really interesting earnings. Pepsi is near all-time high. The earning was, pretty good. There's not a lot of volume growth, but they're able to increase their sales. So when you look at their revenue mix, some part of it is coming from the price, some part of it is coming from the volume. There's absolutely no volume growth, so there's not a lot of demand, but the price is increasing. So they've been able to, pass on a lot of these prices to the consumer, and which, by the way, we saw this in the GDP number today as well. On the week, Qs is up about 2%. SPY and Dow are just flat on the week again, as they started the week a little less ideal, but now they're back. And IWM, small cap, is down 2%. The reason IWM is down is because IWM, the index of the small caps, has a lot of regional banks in it. So First Republic Bank, as you know, is one of those regional banks that is actually inside the IWM index, a small cap index. And just a few months ago, this company was trading at $150, and now it's one of the most shorted banks there is, and it's only trading at $6. So this goes to show you, you really have to have stop loss when you're either investing or trading. You really got to know when to get out, because not always it'll come out. So if you had $100,000 investment, that $100,000 will be less than $4,000 right now, which is crazy to think about. Let's take a look at our slide. So we talked about First Republic Bank. It's actually one of the most shorted banks there is. So right after Silicon Valley Bank, a lot of the really smart short sellers realized that a lot of the regional banks are going to have a lot of problem. So now it's about 30% short. One thing to know about shorting a bank is that the cost of carry is really high, because usually banks pay dividend. Usually, theoretically, their shares are held a lot by insiders. So if you want to short bank stock, the cost to locate that short is a lot more expensive, and you also have negative carry, because if the bank gives out dividend, you got to pay it out of pocket when you short bank stock. So 30% is pretty astonishing for this bank. Another thing that came out in the earning of First Republic Bank was more than 40% of the deposit has left, previous compared to the last quarter, had left the bank. So, no matter how well a bank is run, if there is a bank run, meaning the depositors are taking their money out, no matter how well managed that bank is, that bank's gonna get into problems, because banking is about confidence, is a business of confidence. And if the confidence is out of confidence and trust, and if the confidence is out of the banking system, no bank could actually survive. Let's take a look at GDP numbers. The GDP numbers came out as well. So this is very interesting. On an annualized basis, last quarter was on pace for a 1.1% growth, which is really small. I mean, previously they were hoping to, get a 1.9 to 2% growth. Historical average for US economy is about 2.5%, but the numbers came really small. So we went from 2021, I think 6% GDP growth to 3% in 2022 to now 1.1% in 2023. So you can see the trend is really clear. The economy is absolutely slowing down. And again, this table is very interesting, and it will give you all this information that you want. So 1.1 on an annual basis, you can see where it came from on the good side, durable, non-durable services. And then if you go lower, you can actually see the prices, which prices actually the PCE ticked up last quarter, showcasing that the economy is slowing, but the prices are not coming down as fast as they're supposed to. Another interesting fact here is that, we were in 2021, we were at the 6.97% clip, and in 2022 we were on the 2.5 clip, and now we're definitely slowing down. So what does that mean for rates? So next week is a big important week. We have the Fed's decision on May 3rd. The meeting is on May 3rd, and if you take a look at the contract ZQK3 and the price it's implying, it's giving about a 90% probability that Fed will increase the rate by 25 basis points, and only 13% probability that the Fed will hold. I mean, it's very likely that they're actually going to increase, especially with these GDP numbers that we got and the inflation, that it hasn't really slowed down as much as they like, and there's not enough slack in the job market as well. But what's really interesting is when you go a little further, right, and when you go to June, the meeting after, there is still some weight on another hike, and which is quite interesting. But the further you go, for example, in December, you'll see the probability really shifts, and majority of the weight is really skewed toward the left-hand side, kind of showcasing that there's a higher probability of cuts, at least the 50 basis point cuts, despite the fact that Fed has clearly said they're not interested in cutting this year by any measure. So what do market know? Are they wrong? It's what we have to take a look at. Some interesting data that came out this week that I wanted to share with you is, looking at relatively S&P 500 information technology sector. So these are your Apple, all your FANG names, versus S&P 500 excluding information technology. And you can see majority of the rally in 2023 has been because of those big heavy names like Apple, Microsoft, Google. But recently they've slowly came down, but majority of that rally was because of that outperformance in the mega cap. And is this sustainable? Hard to say, but I find this chart really amusing. And we all talk about the 2002 bubble. And at that time, S&P 500 tech sector was trading at around 7 times revenue, and we called this bubble. And now, even after this sell-off in 2022, they're trading at around 7 times revenue, 7 times sales, which is really crazy to think about on where we are in the market. Next week, however, we got a lot of earnings coming in. We got Pfizer reporting earning, Starbucks reporting earning, Mercado Libre reporting earning, Monster, Apple is coming in on May 4th. So a lot of heavy hitters, Uber, Ford, these companies are going to report earnings. So next week is a really heavy week for earnings, but also for economic calendar. So if you go to economics here, you will see there's some major numbers that are coming. So you're going to get the job numbers obviously on Thursday and Friday, and jobless claims, and then you'll get the non-farm payroll on Friday. You got the mortgage applications coming in on Wednesday. You got the PMI, and you also got the Fed's decision that are coming out. You got the factory orders. So next week is a very heavy week, and hopefully it's going to be a volatile week. Overall, when you go and take a look at SPY, you can really see SPY hasn't done much in almost the past 6 months. It's been inside this channel, in this bigger channel, has been trading in this range. Specifically this past few days hasn't really done much, past few weeks. So is this a beginning of an uptrend, a breakout, or are we going to break down? That's really the question in mind for everyone. So it'll be interesting to see, definitely. But that's about it. We'll hopefully see you next week with another market recap, and until then, trade safely.